Hi, and welcome back to Wednesday Wisdom. I'm Mary of Demeter Financial Services. So, we've covered some of the personal tax deductions. What if you run a business or have a side gig? This is going to take a little longer than our normal, so give me a few minutes of your time today. There are several standard deductions you can take. Advertising and promotion. The cost of advertising and promotion is 100% deductible. Pretty much anything you do to promote your business, logo design, cards, brochures, ad campaigns, social media campaigns, or even sponsoring an event. You cannot deduct contributions to lobbyists or to sponsor political campaigns or events. Business meals. You can generally deduct 50% of qualifying meal costs. It has to be a necessary and ordinary part of business, and you have to have a record of who was there and the reason for the meal. Just write it on the receipt. Make sure you hang on to that. If you have employees, you can deduct 50% of the cost of providing meals when they're working late, if you've bought pizza. And meals provided at office parties and picnics are 100% deductible. Business insurance. You can deduct premiums you pay for business insurance, including property coverage, liability coverage, group health, dental, and vision insurance for employees, professional liability or malpractice insurance, workers' comp coverage, auto insurance for business vehicles, and life insurance that covers employees if the business or the business owner is not the beneficiary of the policy. Business interruption insurance covers losses due to fire or other cause, but you have to watch for the exclusions here. A lot of people thought that when they had to stop because of COVID, it would be covered, and many of them were not. Bank fees. It's cleaner to have separate bank accounts and credit cards for your business. Then any annual or monthly service charges, transfer fees, and overdraft fees are deductible. You can also deduct payments to a third-party payment processor, such as PayPal or Stripe. You cannot deduct fees related to your personal bank account or credit cards, even if it's a business expense. So that's why it's easier to have a business account. Business use of your car. If you use your car or truck solely for business purposes, then you can deduct the entire cost of operating that vehicle. If you use it for both business and personal, then deduct only the costs associated with the business-related usage. So two ways to do this. Standard mileage rate, multiply the miles driven by business for the year by a standard rate. For 2020, the standard mileage deduction is 57.5 cents per mile. In 2021, it's going to be 56 cents per mile. Or you can use an actual expense method. So track all the expenses of operating that vehicle: gas, oil, repairs, tires, insurance, registration fees, and lease payments. And then multiply those expenses by the percentage of miles driven for business. And there are apps you can use to track your mileage, or just keep a log in your car. Use your calendar to mark mileage on there. And if you keep a mileage log, clearly document the miles driven, time and place, and the business purpose of your trip. Now, keep in mind, if your office is not in your home, you cannot deduct the miles driven while commuting from home to your regular place of business. That's considered personal commuting expenses. Contract labor. If you contract with someone to help in your business, you can deduct their fees as a business expense. So if you pay someone, keep in mind though, if you pay them $600 or more during the tax year, you are required to send them a Form 1099 NEC by January 31st of the following year. Depreciation. When you purchase furniture and equipment and other business assets, depreciation rules allow you to spread the costs of those assets over the years, but you might try expensing them up front for a quicker tax benefit. There's been change in those laws. And there is a way to write them off the full cost in 1 year using de minimis safe harbor election, section 179 deduction, or bonus depreciation. If you're going to use any of these, though, I'd recommend talking with your accountant or using a tax preparer to help make sure that you're compliant with the requirements. Education costs are deductible if they add value to your business and increase your expertise. So, valid business expenses include classes to improve your skills in your field, seminars, webinars, trade magazine subscriptions, books tailored to your industry, and once we get past COVID, transportation events, expenses to and from classes. And if those classes are going to help you for a new career or don't directly relate to your business, they don't qualify for a business tax deduction. Home office expense. A lot of people are going to start a business this year or have started businesses. And you may be able to deduct a portion of your housing expenses against that income. So there's a simplified method. You can deduct $5 per square foot of your home that's used for business up to a maximum of 300 square feet. Or a standard method, which is to track all the actual expenses of maintaining your home, mortgage interest, rent, utilities, real estate taxes, housekeeping, and landscaping services, homeowners association fees, and repairs. Multiply these expenses by the percentage of your home devoted to the business use. Now, here's two requirements. The place must have regular and exclusive use. So if you're sitting at your kitchen table, that doesn't qualify. And it doesn't have to be an entire room, but the area you use must be only for the business. So a corner of the dining room maybe, or if a section away from the breakfast table in the kitchen, not used for other things, could qualify. Pro tip, take photos in case you get audited. And you also have to have the second requirement of this is your principal place of business. So you have to spend most of your time and conduct your important business activities there. So, and another little thing to take into consideration, if you have a he shed or she shed and you're going to use that as your home office, there could be a tax impact when you sell your home. So again, accountant or preparer can help with this. Interest. If you take out a loan or use a credit card to cover business expenses, you can deduct that interest paid to the lender or credit card company. As long as you are legally responsible for the debt is to be repaid, and there is a true debtor-creditor structure. So if mom and dad made the loan or your sister made the loan, make sure it's in writing and that you can show that you've repaid or are repaying it. Legal and professional fees. Any of those fees that are necessary and directly related to running your business are deductible. Those are fees charged by lawyers, accountants, bookkeepers, tax preparers, online bookkeeping services. Now, if there is payments in there for work of a personal nature, such as making a will, you can only deduct the part of the fee that's related to the business. The will cost, can't deduct that. Moving expenses. Business can still deduct the cost of moving business equipment, supplies, and inventory from one business location to another. Keep good records. Be sure to keep those records to substantiate all the costs associated with your business move. Now, rent expense. If you rent office space or equipment for your business, you can deduct that rental payment as a business expense. But rent paid on your home should not be deducted as a business expense, even if you have a home office. At most, you can only deduct a portion equitable to the square footage. Again, talk with your accountant or tax preparer. Salary and benefits. If you pay salary, benefits, or even vacation time to employees, those are generally tax deductible as long as they meet a few criteria. They are not a part owner of the business. The salary is reasonable and necessary, and they actually did the work. So if you hired your brother, make sure you can document what the work was that he performed and salary he earned getting it, or doing that. Taxes. You can deduct various taxes and licenses related to your business. This can include state income taxes, payroll taxes, personal property taxes, real estate taxes paid on business property, Sales tax, excise taxes, fuel taxes, and then business licenses. Um, if you're just not sure whether it's a business expense, it's just a good idea to consult with an accountant or tax attorney or preparer. Telephone and internet expenses. If a telephone and internet services are integral to your business, they can be deducted. And who can get by without that these days? Do you understand that if you have a landline, you cannot deduct the cost of that landline, even if you use it solely for work, if that's the only landline in the home. You would need a second landline devoted just to the business for that to be deductible. If you use your cell phone and internet connection for both personal and business reasons, you can only deduct the percentage that you can allot to the business use. Keep an itemized bill or other detailed records to prove the amount of business use in case your return is audited. Travel expenses. For a trip to qualify as a business travel, it has to be ordinary, necessary, and away from your tax home. Your tax home is an entire city or area where you conduct business, regardless of where you live. The business must take you away from your tax home for longer than a normal day's work, requiring you to sleep or rest away from home. And remember to keep the records that include the amount of each expense, as well as dates of return, departure, details of the trip, who you might have met with, a mileage log if you drove your own vehicle, and business reason for the trip. Now, personal tax deductions for business owners. So, all the above mentioned deductions can be claimed on a Schedule C or Form 1065. But there are a few other tax breaks that small business owners can commonly claim on their individual returns. So, charitable contributions. Sole proprietors, LLCs, and partnerships cannot deduct charitable contributions as a business expense. But the business owner may be able to claim the deduction on their personal tax return. Keep in mind, your time is not a deductible expense. It needs to be cash or goods type of contribution, and it must be made to a qualified charity. Starting with 2020 returns, taxpayers can claim up to $300 of cash contributions as an above-the-line deduction on the Form 1040. If you want to deduct more than that, you will have to itemize the deductions on Schedule A attached to the Form 1040. Child and dependent care expenses. You may be able to claim this if the person receiving the care is a child under the age of 13 or a spouse or dependent who is physically or mentally incapable of self-care. That credit is worth between 20 to 35% of your allowable expenses, depending on your income. And the allowable expenses are limited to $3,000 for the care of one dependent and $6,000 if you paid for the care of two or more dependents. Retirement contributions. So you can deduct contributions to employee retirement accounts as a business expense, but as a business owner, if you're contributing only to your own retirement fund, you have to claim the deduction on Schedule 1 attached to your Form 1040. What you can deduct depends on the type of plan you have. This one is definitely worth a conversation with a tax preparer or accountant. Healthcare expenses. Along with insurance premiums, you can deduct other out-of-pocket medical expenses such as office co-pays and the cost of prescriptions. These costs are included on itemized deductions on Schedule A. If you're self-employed, you can also deduct health insurance premiums for yourself, your spouse, and dependents on Schedule 1 attached to the 1040. Unfortunately, if you're eligible to participate in a plan through your spouse's employer, you can't deduct those premiums. So track all the expenses related to running your business and go over them with your accountant to ensure you're getting every legitimate deduction. Tax deductions are an essential way to minimize the amount of tax you have to pay, and good record keeping will ensure you get to keep those deductions if the IRS ever decides to audit you. And if you get that call, don't panic, return the call, make your appointment, and take your records in with you. If you have any comments or questions, feel free to click the Contact Me below contact Mary below, and I'll get back with you. We'll talk to you next week. Thanks.